We're halfway through earnings season, and as of last week, the Wall Street Journal reported that almost 80% of companies that have reported earnings so far have come in below expectations. So here's a quick recap of 4 companies so that we can see what the market is telling us and what are some signs within the economy. First and foremost, Amazon. Amazon crushed their earnings report. This is the best earnings report they've had since the fourth quarter of 2020. Many people are saying that the cost-cutting efforts of new CEO Andy Jassy are finally starting to bear fruit, and their net profits were up, their sales were up, advertising revenue was up, and their cloud computing revenue was also up and exceeded expectations. The stock rallied pretty significantly based off of that news. Apple, on the other hand, had a less than stellar earnings report. They're predicting 4 straight quarters in a row of revenue declines, and their sales were down by about 1%. Berkshire Hathaway. So Warren Buffett and his company, his conglomerate, reported earnings last Saturday, and what they told us is that their cash pile has swelled to nearly $150 billion. That's almost a record high for them. Their insurance earnings have also been stable, and what that cash balance has enabled the company to do is earn a significant amount due to the elevated interest rates that we've seen. So much so that Warren Buffett has said that every Monday he buys about $10 billion worth of 3 or 6 months U.S. Treasury bills. Turning locally now to American Financial Group, so Great American Insurance. They have reported strong earnings and have beat expectations 10 out of the past 11 quarters. However, their most recent earnings report was not so stellar. They had losses in their underwriting business and some of their catastrophe insurance business as well. The stock saw a pretty steep decline after the earnings came out. However, the price target and the estimates on the stock still remain pretty high of around $125 per share. So there's a quick recap on earnings. We still have a couple more weeks of earnings reports to come out and to pay attention to.